But our next guest is bullish on the group overall. So joining us now is Sharon Zackfia, the head of consumer research at William Blair. This is all an interesting conversation, Sharon, to juxtapose it next to Campbell's comments with regard to people eating at home more. So which restaurant brands can actually buck the trend and get people to go out more instead of eating at home more?
Sure. I mean, I think, well, first of all, thanks for having me. I think, restaurants is largely a market share battle. So it's always the haves and have-nots. Right now we're seeing great results from companies like Cava. Dutch Bros is doing a wonderful job. You mentioned Cheesecake Factory. So we're definitely seeing companies take share here. I think what's also very interesting is we're seeing, I guess, what I would call a blurring of the lines between these different segments, between limited service and fast casual, between casual dining and fast casual. And that's created some interesting dynamics as we've gone throughout 2025 so far.
How exactly do you navigate the changing consumer trends and landscape? Because oftentimes they don't turn on a dime, but they do shift. I saw another report that said that some folks are upgrading from some of the fast casual, say like a Chipotle or a Jersey Mike's, but then down from, say, a Capitol Grill. So that's the sweet spot for, say, a Chili's or an Applebee's or an IHOP. What exactly does your research show about where people are going? And what's the common theme among your three big names of Dutch Bros, Portillo's, and Cava?
Yeah, I think we're seeing the consumer trends are very confusing right now, to be quite blunt. But we're seeing, dinner outperform lunch. We're seeing suburban outperform urban. We're definitely seeing, for the first time in a long time, casual dining outperform limited service. Some of this is comparison related, but it is all very interesting in the context of this kind of dynamic consumer environment we're in right now. Our tendency is to bet on the companies with a lot of TAM, a lot of growth prospects, companies like Cava, Dutch, Portillo's. It's not so much about what's happening in the June quarter. It's more about what happens over the next 5 to 10 years. They're all companies with great growth prospects, increasingly proven geographic portability. Those are the companies that can compound from a stock perspective and really yield those outsized returns, regardless of what's happening kind of in the near-term consumer environment.
Yeah, and I don't want to pit you against the CEO of Campbell's, but you're saying you're not really seeing the same trends in your data, that people are eating home and in as large numbers as they were a few years ago. And I'm interested that dinner is outperforming lunch. What is that, just because lunch is underperforming because of return to work?
It's very confusing. So typically in a macro slowdown, you would see dinner underperform lunch. You would see casual dining underperform limited service. That is not what we're seeing. And, I don't want to take on Campbell's by any means, but, I think the first 4 months of this year, which is really what we have the data for, has a lot of noise in it for the restaurant space. We had a very bad February from a weather standpoint. There were LA wildfires. We had an Easter shift. All of those dynamics make it really hard to read restaurant trends. And people don't eat out twice as much the next day if they were snowed in the day before. So when you lose a sale, you lose a sale. And that's, and we've had Liberation Day tariffs as well. So lots of noise. I tend to think the consumer is pretty resilient here. And in other times of economic duress, we've seen restaurants hold in very well as a group, but it hasn't always been for each individual concept within the group.